day all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Wednesday, the 29th of May, 2019, just getting on at 4:35 p.m. Central Daylight Time. Well, as you can see, the stock market, a down day today. It was a recovery off the lows by quite a bit, but still a sizable down day. We're coming to the end of the month. What are we going to do on an end of the month? That could be the interesting part, too. You can see that the gold had a bit of a bid along with the silver. The dollar index still strong. This market just relentless to the upside, and most of the currencies, well, they're waffling. They're trying to figure out what to do. The Swissie's been gaining on the eurocurrency quite regularly, and while these prices are down in all these products, at the end of the day, the market rallied back very close to unchanged, and the reason it did that was right here. If you take a look at the API Petroleum stocks recap, negative 5.3 million barrels in the stocks itself. Prior week, they were up 2.4. We saw gas still up, which is an interesting thing because you would think with Memorial Day it wouldn't have been, but it still was up. In fact, greater than it was the prior week, but still it's made up for a big decline. So net, we have about a 4.5 million barrel draw. It's not the biggest draw, but it's a sign that the market's headed in the right way with usage. And we even see that the Cushing stocks fell down too. So as you take a look at all this, the question is, where are we? Well, you're in a correction. You can see that on this weekly chart. This market has come off 29.47 to finish today around the 27.80 level, so roughly 160 points off the highs. When we take a look at a daily bar chart, you can see that the market's broken under current support. That likely leads to even further declines longer term. Now, whether that'll be short term remains to be seen, and let me explain that. We have the pattern of lower highs, lower lows. We've had that. That's been bearish on the market. The market's been trading under the 18-day average. I've been consistent in saying that's bearish about the market. The other thing I think I pointed out was I wouldn't be surprised if the market tries to find support on the first challenge right here of the 200-day and the 100-day moving average of closes, the gray and the green. And as you come to today, you can see that that's pretty much what the market did. Admittedly, it closed under both numbers, but that's the area that gave the market a little bit of support. Now, what next? I look at the Bollinger Band, and you're riding that Bollinger Band. What do I mean by that? If you look at yesterday, you hadn't quite gotten to that band. Now you're pushing that band out. You settled over it. That number's 27.75. You're at 27.80. Remember what Bollinger Bands are. They represent support on the downside, resistance on the upside, but a lot depends on what momentum is doing with them. And in the case of this market, momentum is oversold. Therefore, the market has to make a decision. You correct an oversold condition by one of two things. You can rally, and that will get the market to start eventually turning this indicator back to the upside, or both numbers can continue even further down and eventually embed. You're not there yet. It takes both numbers to be under a 20 reading to begin the embedding process, and then it has to stay that way for several days in a row. Got to be consecutive. So I have an oversold market in a layer of support. If it rallies, the question is, what does that mean? I don't see anything on this chart to turn the trend up. You'd have to get over 28.42 to negate the downtrend, but then the 28.59 level will act as resistance. So I can see the pros took some money off the table if they're moving average folks, but I don't see them getting bullish, the market. In the NASDAQ, let's go to yesterday again. If the market fell back, I was looking for support potentially at the 200-day average and the 100-day average, along with the lower Bollinger Band. You see all that right through there. So if the market gets there, given that you're in an area here where you're pushing down, you're not embedding, but you've begun the process. Both numbers here are under 20, but not the day before. So I have both numbers under 20. Today, the process continues. Again, both numbers under 20 and into this layer of support. Tomorrow's when you can embed at the close of business. Now, if you embed, it changes the character of the market, because then one starts saying on rallies, the pros are probably, besides taking money off the table at support zones, going to be fairly aggressive on short selling on bounces. That's the theory. Doesn't mean I'm right. When I come to the Dow, you had already cut through the 200 and the 18. And the 100-day average. The 18 is the red line. You were oversold. The next layer of support, if the market's going to go down to it, would be this lower Bollinger Band. It's going to move a little bit because, remember, it's dynamic as the market is trading, and that's what it did. You finished out today at 25,109. 25,080 is the lower Bollinger Band. So the market, I think, saw some profit taking come in again. So I'm getting a common theme here that won't surprise me. And even the Russell. Now in the Russell, how many days do we have under 20? Today, the day before, and the day before. This is the candidate, I think, that on the rallies where the pros are going to step in and be the most aggressive because it's already embedded. Like the other markets, I'm waiting to see what it does against the Bollinger Band if it gets there. But you'd have to lose now this embedded reading to negate any of this action. This takes the hierarchy now. It's changed its nature. So you can take out this high, and if this is still embedded, I contend that the bears will still be there and aggressive on the short side. If the red line closes over 20, I will change my thinking on the market and think that price and probably this combination of the 100-day average and the 18, the red line, could be where the market goes. I don't see it yet. In the VIX, I've got momentum up, I've got trend up, higher lows, higher highs, I have bias up. So I still see the bulls in control of this market. Admittedly, it's settled back on the day, still higher. Layers of support right through here, resistance, the upper Bollinger Band. And if you get to that upper band, it would not surprise me that the pros do what they've been doing so often. They seem to be selling when you hit that upper Bollinger Band calls. Now, it's got certain risks to it. I mean, whenever you sell a call, you've got to understand that it's like a futures contract. It can just run, and calls are typically thinner in volume than the futures contracts. But I wouldn't be surprised that that is what they do. On the way down, I still see the support right here. I'm not saying it has to get there. I think the bulls have control of this, which is still bearish the stock indices. In the T-bond market, up and riding, this is called riding the upper Bollinger Band. You come back under it, you get back over it for a day or two, you pull back, and you have the embedded reading. Still a very bullish situation. Same thing in the 10-year. Notice how you've got the embedded reading, so everything's still bullish on that one. As we come to TLT, you've got the embedded reading, and this is why I think stochastics are so important, and I like them better than all the other oscillators for momentum. Higher lows, higher highs over this number. I can't believe how many people come to me in our own office and they'll ask me about these embedded stochastics. What do they mean? They become believers as to what the theory behind that is. I created at least the embedded idea. George Lane, I remember when he created slow stochastics. Give him all the credit. Great little tool. Nothing works all the time, but it's a neat tool if you believe that momentum leads price. In the dollar index, we're still caught in what I'll call the sideways action of the Bollinger Bands. We went up today. You got to 98.10, 98.11 is the Bollinger Band. You finished 98.03, but still respecting that resistance zone so far. On the euro, back down to the lower band. Now you popped and tried to get under it. You finished at 111.51. 111.53 is the lower Bollinger Band, so you're basically on it. Will you break out of it is the question, one way or the other, or is this market going to give you a bounce? In the British pound, it is still a market that has got lower highs, lower lows. What's ruling the day is the embedded reading. It's still fully there. Japanese yen, still a pattern of lower highs, lower lows, but you're over the 18-day average of closes. It's pretty interesting, too. You're attempting right now to get what's called a bullish crossover. That means the short-term average, the 18-day average, is getting over the 100. Now, what we need to see is how the market acts tomorrow. If it's going to be a failure crossover, prices will probably close or go right back down to these numbers. When I say close, can close under them. If the market starts making new highs, that's in line with the crossover. It should make a new high for this move completely, which is taking out these highs. So we'll see where we're at there. In Bitcoin, I still have the embedded reading, so I'm a broken record. I'm bullish on this market still. Till you lose that reading, why not be bullish? In the Brent versus WTI crude, well, you got up to the nearly $11 difference. You're back to the 1060s, but this is still a market that favors Brent over WTI. Today, you hit the Bollinger Band again, bounced away from it. Still down on the day, but bounced away. The trend is down. The bias is down. It's interesting right now because 70.58 was the last swing line high. 70.70 tonight is the 18-day average of closes going into the evening. That average is slipping about 6-7 points a day, as you can see. So what we should see tomorrow is very close. The 77 will probably drop down into the low 70-60s, very close to this last number here. If this market were to get over 70.58 and close over the 18-day average tomorrow without violating this low, I would say the market has made a short-term bottom and putting into the possibility of rallying back into the mid-70s again. In the WTI, it's very different. Brent is stronger than the WTI. Clearly lower highs, lower lows, settling under everything here. 58.81 was the settlement. If we take a look, you finished with a Bollinger Band bottom of 58.20. You hit it today, rallied back, and fighting a battle against the 100-day average. Let me go back to this. Often you get to a key moving average, and it doesn't always have to be the 18. And that what became support can become resistance on the way back up, and that's what that did today. On that bounce, it acted as a resistance point. Unlike the Brent, even if you take out 59.57, you cannot turn the trend of this market up because you came down and made a lower and low. In the gasoline market, it's more like the Brent. While the pattern is lower highs, lower lows, you are oversold. You're respecting each time you're hitting the lower Bollinger Band. Should the market decide to get back up and over the last swing line high of 195.66, it's probably also going to be over the 18-day average, which is falling, as you can see, right now in the neighborhood, probably 15 points a day or more. So that could easily be down to very close to that 195.66 or under it. That would turn the market on a dime for me back into an uptrend. We'll see if that can happen. In the Nat Gas, look at the battleground. Yesterday, you had an outside day down. If you take out the high of an outside day down, I look for the closest of the key moving averages, be it the 18 or the 100, the closest. And what this market did is it went through it, got back to the 18, and negated what we'll call the downtrend. You no longer have the lower highs, lower lows. Now I'm going to say you got to bounce this way, you got the higher high, got a lower low and a higher high. I don't think you're trending at this point in time. You know, the way to make this all come together, and let me see if I can get this here for you, here we are, is with my charting course. Now, the course, this is Memorial Day weekend. So for Memorial Day week, I've lowered the price of the course. I'm also going to raise the price of the course right after this sale to $179.95 from the $169.95 it is now, but on sale it's $99.95. And it comes with the charting software that we typically give you. I'm assuming you haven't used our charting software. You're going to get 54 video chapters. The 54 chapters teach you in a very certain manner my swing line theory. You'll learn how to plot it by hand and then how to use the indicator itself. That way you understand it. Moving averages. You're not seeing all the averages I use, so you're going to learn about more of them in the course. Slow stochastics, my little tricks with it, how I teach it, how I believe it works. Bollinger Band theory, I really believe in that one a lot. And of course, you haven't seen window envelopes because in these videos that I put on YouTube and the like and go to other websites, too many lines on a chart are going to confuse the people there. Once you take the course, you're not going to be confused. Everything starts filtering each other. And that's the idea of what I teach. I don't care if it's futures, options, stocks. If it's a chart, a chart's a chart. And when I teach, sometimes I take the names off the chart. I don't want to influence you. It's gold, it's silver, it's crude oil, it's the stock market. We all know the stock market's rallied for 10 years basically, and it's coming back. When I was on BNN today, we were talking about that, and the hostess was dead right. She said, you know, Ira, it fell nearly 20% in December. Is the market really up? Well, that's the big question, is it? We go through all this. And the idea here is to teach you 5 simple steps to look at a chart. If you're able to do that, I think I can teach you my methodology. It's not technology. All you need to do is go to our website, www.iraepstein.com. Hit the word education. It will show you right there in the pattern where you need to be, and away you go. You can also click up here if you're watching me on YouTube. That'll take care of you. And tomorrow, if you want, give my staff a call. They can run it, your credit card, whatever you want through it. I want to remind you, this price is going to go to $179.95, and I do sell them at that price. I've sold them for a lot more than that as I finish up the Memorial Day holiday. I'm Ira Epstein. You have a good weekend.